Good morning, traders. In front of you, Alpha Fibonacci System on S&P Mini Future. Top day trading instrument in United States. It is highly leveraged. You must exercise extreme caution when trading, especially this. What is this chart showing you? This chart showing you again and again and again what we discuss in every single class with my brilliant students. Institutions holding their longs, institutions adding to their longs, institutions not closing positions. This is the software in front of you right now. Intelligent trader pays attention to this chart. For the last 40 minutes, price been doing this. Brokers haven't danced. We need powerful retracement, price extremely high. Agree? Intelligent trader does not touch this junk. Powerful pullback is crucial before you will ever monitor to touch the markets. When price remains in this junk, broker printing money. In current market conditions, this plays out 90+% of the time. This is the most important part of your trading. When not to lose money, when not to lose your mind, when not to pay for your broker's vacations. With the power of the software, you see instantly, it's a brick wall. With the power of long-term Alpha Fibonacci system, you identified this many days before. If you were in the trading room last week, you saw we discussed days in advance. We discussed this in class. This is ultimate place for day trader to trade, to buy the bottom at day traders reversal zone at institutional points of entry. This is what strategic intelligent trader does. Intelligent strategic trader does not touch the top. This is a war zone. This is your trading range. This is massive junk. This is the most important part of your trading. When not to stare at the screen, when not to pay for your broker's vacations. So if I convert this chart to any chart you choose to trade, let's do 5. What is this chart telling you? Bullish rally overextended, correct? It's a vertical rally. Intelligent day trader understands buying at reversal zone at bullish trend inception, buying at critical support levels is the only way to become successful trader. Buying here is gambling, not trading. It's exact same thing that applies to any instrument you choose to trade. If I convert this chart to 10 to 15 to any chart, what is the most dangerous market? Tell me. Overextended bullish rally. Do you know what overextended bullish rally known for? Being stuck. Why? Because institutions love holding longs. Institutions love enjoying profits. Institutions love enjoying long vacations. This is very different here. We can be stuck here for months, even years. There are 0 institutional shorts. 0. We discussed with students, intelligent trader not touching any shorts. We discussed with students, sellers are worthless. Intelligent trader knows this by looking at this chart. So what just played out in front of you is exactly what we discussed with my traders, with intelligent strategic traders who did not touch any short. This is how intelligent trader separates powerful sellers versus junk. Touching this is not a brilliant thing to do. Staying on sidelines is the only option. And that's the most important moment in your trading. In current market conditions on S&P mini future, this presents a whole lot. This is where institutional trader works. Take a look and remember, sell-off never ever ever gets stuck, correct? Sell-off never ever ever lasts. Sell-off never remains frozen. Instant vertical institutional buying. Instant. This is what intelligent trader understand. Institutions love powerful sell-offs. But as I teach in long-term class, every single sell-off, institutions were averaging up. In vicious sell-offs, we have spectacular bullish rallies. In vicious sell-offs, everyone who loves day trading shorts getting into serious trouble. Because institutions love buying sell-offs. When market was selling off 3,000 points, bullish rally were 2,000 points, non-stop, vicious. When market was selling off 3,500 points, bullish rallies were 2,500 points, non-stop, vicious. Understanding the difference between sell-offs versus vertical recoveries is crucial, essential part of your investment and day trading decisions. Let me remind you what played out. So again, S&P and Dow and Nasdaq nowadays do this a whole lot. So when top 1% becomes 40% richer within 1 year, within one class, you start thinking very differently about trading the markets. It blows your mind what you start seeing in the markets. If you start thinking as institutional trader does, your trading shifts to drastically different level. Right now, hold is on. Zero institutional shorts. This can last months and years. Intelligent trader understands what identifies institutional sell-off versus not. And that remains the key. And that remains the core. Here's a reminder. March 8th, 2020. On the news, markets are closed. Markets are halted. On the chart, market is rallying. How is it possible? This is day trading support, March 8th. Bold pink line means never ever ever enter into. Dow skyrockets more than 1,000 points. This what plays out next. For many hours, Alpha Fibonacci support remains respected. Price frozen at these levels. This what remains. You never hear this on the news. On the news you hear panic and negativity. On the chart, prices rallying. This is what plays out during bearish markets. More vicious the collapse, more spectacular the rally. Dow rallying 1200 points, but if Dow collapsing 3000 points, you never hear this on the news. It plays out on your charts. Institutions averaging up, buying on the way down. Here's another crucial moment. You know this many days in advance. When price collapses to the next level, during historical events, you know many days in advance where market will rally from. But let me take a pause and let me remind you identical level on Apple. Day trading not your cup of tea. Use everything for long-term positions. Apple comes out with the worst earnings, 2015. But it remains at this support. I presented hedge fund event. I state the most important thing to see if this support will be respected or not. Apple doubles 2 years later because Apple held this support. And that's very powerful lesson. Obey the price. Do not trade on the news. If trading on the news worked, you would be shorting Apple, correct? If trading on the news worked, you would be shorting into this support. 3 days Dow keeps rallying, but you never hear this on the news. This is a stunning reminder of the importance of pure price. This remains the key. This remains the core. And when finally price keeps selling off, it reaches Alpha Fibonacci reversal zone. March 12th, March 13th, you never hear this on the news. Dow keeps rallying thousands and thousands of points. You are not surprised. It's a day trading reversal zone. And it's institutional buy points. But again, on the news is panic. On the news is negativity. On the news, Dow keeps crashing. On the chart, Dow keeps rallying viciously. And that's the power of Alpha Fibonacci system, all identified in advance, never after the fact. This is a stunning reminder of very different bearish markets with very vicious bullish rallies. And that's what intelligent trader understands. This is Dow with spectacular bullish rally during the worst trading week in 2020. But you knew institutional buy points days, weeks, months in advance. Everything in Thursday class. And this is price a year ago, March 2020. And this is S&P this week, a year later. In front of you, on day trading chart. Price is stuck and frozen. Sitting and staring at this will never ever make you money. You are not in front of the screen right now. You are not paying for your broker's vacations. So this is a huge difference, traders. Huge difference between the markets a year ago versus markets 6 months ago versus markets now. When you understand this, your trading shifts to entirely new level. Every pullback keeps being bought by institutions. Knowing institutional entry points, thinking as institutional trader takes your trading to entirely different level. And that's how Alpha Fibonacci trader trades. Understanding clearly prior to the trading day where to enter, where not to leave the screen, where to take positions with institutions at the ultimate low, at the key support levels. This is not the place to enter. Without powerful pullback, this is gambling. This is not trading. And that's very different markets. And that's stunning reminder of the importance of vertical bullish rallies. Enjoy when you entering positions with institutions. When you know this months in advance, you scheduling your trading around institutional levels. You know this many months in advance. Here is S&P 14 months ago, before the crash. Intelligent trader understands what identifies institutional crash. And when markets selling off, intelligent trader knows months and years in advance 2200 institutional buy zone. And when sell-off reaches this key level, and when price showing you what the key is, you are in excellent shape, no matter what chart you trade. That's it. You never need anything else. You day and position trade. You understand different trading range every single day. And when institutional rally reaches reversal zone, intelligent trader identifies it's a mild profit taking. Institutional support remains intact. There is absolutely no powerful selling pressure here. None are present. It's a very different the rest of 2020 with endless institutional longs. This is junk. This is mild profit taking. But trading this is the most important part of your trading. Because vertical institutional frozen rallies can last months and years. 2021 will be vicious and brutal. 2021 markets will be extremely choppy, giving you a whole lot of this. Intelligent trader understands this is a part of the deal. Intelligent trader understands what identifies powerful sell-off versus junk. Brokers heaven, not part of your screen time. Correct? You're paying for your own vacations, not your brokers. You understand the danger of these markets. You can manage these market conditions. You enjoy buying the bottom with institutions. 2200 ultimate bullish trend inception with the power of Alpha Fibonacci system identified months in advance. We discuss this in every Thursday class and module 3 and 4. You don't want to trade S&P? Not a problem. Move to the instrument that moves. Move to gold. Move to silver. Move to oil. Do not overcomplicate trading. This is progress on gold. Hedge fund manager in the course acquired position 2018-2019 at the bottom. And when you know many months ahead where gold reversal zone will be, does this look familiar to you? Tell me. This is a twin chart with S&P right now. What is the difference? This is your long-term investment position on gold. If I put in front of you right now day trading chart on S&P. This is S&P now. This is gold. Twins. Identical price action. Very different trade hold time. But when gold's selling off, you are not surprised, correct? Gold in free fall. And when gold will reach 1300, intelligent trader will obey Alpha Fibonacci rules. Intelligent trader will not speculate. Do not overcomplicate trading. Focus on pure price. And when you do, you can trade anything you choose. So here's sell-off on gold from reversal zone. That's it. Just to remind you again, this is what gold looked like 8 months ago. When price comes to reversal zone, price collapses 80+% of the time. Do not overcomplicate trading. This is your long-term investment position. This is your day trading. You're shorting from ultimate reversal zone. This is not the place to buy gold. From reversal zone, gold collapsed all the way to 1650 level. This is a chart on S&P right now. This is your day trading decisions. Identical price action, very different trade hold time, very different risk management. This is your ultimate psychological test. You knew days in advance this is not the place to buy. You know what identifies powerful selling pressure versus not. You are not paying for your broker's vacations. You are not babysitting the junk. You're only interested in powerful pullback. And when powerful pullback will play out, you will enjoy only powerful trading. And that's Dow 12 months ago. That's S&P from 14 months ago. That's gold for the last 2 years to now with the Alpha Fibonacci system. You want to trade them all? Of course you can, as traders do globally for the last 10 years. So one of the students trading Nasdaq, this is hourly chart on Nasdaq. Alpha Fibonacci system identifies all of this, bullish entry points, hours and days in advance. This is day trading chart right now, Nasdaq at key resistance. You know this days in advance. So if I convert this chart to 5, 10, 15, any chart you choose to trade, here's Nasdaq. You are never entering into this level. You're buying at support, you not enter into resistance. Identical junk on Nasdaq as on S&P. I convert this chart to 10 to 15. I take a look on Apple, on Amazon, all the charts are exactly the same because it's pure price and Alpha Fibonacci rules. With Alpha Fibonacci tool, you can install on any instrument you choose. GBP CAD in front of you. Pound CAD bullish rally overextended. Pullback from this level is crucial. So do you remember what we discussed on Dow? Do you remember behavior of Dow in 2020? This is JETS 2018-2019. JETS struggling to break through this level for years. Once the end of the bullish trend weakness is broken, JETS skyrockets from reversal zone, but this is where we are. On weekly chart, JETS is frozen for the last 3 weeks. You knew this months in advance. You are not entering into Alpha Fibonacci resistance. You're buying with the rules at the bottom. And it doesn't matter what chart you trade. It all remains the same. This is JETS, the start of the rally from ultimate low. This is JETS in brutal pain right now. How to trade the system? You must obey the rules. You never pull a trigger randomly. If traders globally can obey the rules, so can you. And when you do, the skies are the limit. It doesn't matter if you trade in Saudi Arabia. It doesn't matter if you operate hedge fund. It doesn't matter if you bring your son to the course or not. If 14-year-old can do this, if healthcare executive can do this, who brought his best friend to the course, if Brett can go from $10 an hour to $3,500 a day, if mom of two can do this on any account, on any time frame, so can you. Do not overcomplicate trading. Choice is yours, what you will decide to trade. Because when complete beginner trader can do this, so can you. Do not overcomplicate trading. So if you start understanding the difference between retail versus institutional trading, if you start understanding the difference between retail profit taking versus institutional position exiting, it's a very big difference. This is the core of the Alpha Fibonacci system. You decide what you want to trade. Is it Apple? Is it S&P? Is it oil? Is it Forex? It's traded on all of the instruments, all of the platforms. Choice is yours. What you want to trade. Do not overcomplicate trading. Simply listen to students, view what students do globally, and choose from the package appropriate for you. It is a lifetime system for any platform, or lifetime software for Ninja 8 with a lifetime system for any platform with 3 months live course. Private mentoring 4 months. I hold your hand. I teach you exact same trade I taught to JP Morgan trader. Video library modules included. But as always, Listen to podcasts and see what's possible when you make an effort. Because if these traders can do it, so can you. This is a key lesson on the importance of institutional frozen rallies versus institutional sell-offs. So if you want to trade on options, Alpha Fibonacci system, of course you can. I'm meeting with Steve on Friday. Brett is my friend for life. From $10 an hour to $3,500 per day. Listen to the podcasts and see what you can do. Carlton Trading for Hedge Fund. Choice is yours. Obey the rules and the skies are the limit. Any questions, please call or email me 925-257-4298 or info@fibinstitute.com. Thank you, traders.